Hey, welcome back to the channel. In today's video, we will look at the housing market activity for the 9 Bay Area counties for the month ending October 2022. Before we dive into that, I want to share a summary of what's going on nationally. At the end of the video, I'll give you my thoughts on where the opportunities are in the market, if any, what you should be doing if you're a buyer. Hey, my name is Mac Rogers. I'm a real estate broker here in the San Francisco Bay Area. Welcome back to the channel. As we sit here in November, we can take a look back and see that home prices have peaked nationally in June of 2022. The way things are going, it's not going to be likely that we see prices go up this November and December. In the Bay Area, prices peak around the Bay somewhere between April and June, with Napa peaking around late August. We're seeing demand for homes steadily decline over the last several months. This is primarily driven by the season we are heading into, fall, which is normally or typically a slow period, but a lot of this slowdown can also be attributed to skyrocketing mortgage rates. With these two things going on, you would think that inventory of homes should start piling up, right? It's not happening to the extent that would cause prices to drop like crazy. A lot of sellers right now are holding off on selling because they feel they've missed the boat. And what most are doing is just staying put or renting out their homes, which is still causing inventory to decline relative to actual demand. The market has definitely shifted though. Further proof of demand softening are mortgage applications. They're down 29% year to year according to the Mortgage Bankers Association. Bay Area-wise, according to the most recent report from the California Association of Realtors, existing home sales are down 26.6% year to year and down 21.6% year to date, and existing home price is down 2.6% year to year. That's what's happening around the country in California in summary. Let's look at the individual counties' October market activity. Let's start with Alameda County. The number of sold properties went down on a month-to-month basis by 19.25%, while year to year it's down 41.22%. Days on the market went down this month, only 16 days compared to 18 back in September. Compared to last year, it's up 4 days. Let me just touch upon this right here. Whether it's 16 or 18, these are still fast, just not as fast as last year. The median selling price is up by almost 5% month to month and slightly down year to year. Moving on to Marin County, the number of sold properties went up on a month-to-month basis by 4.62%, while year-to-year it's down 33.77%. Days on the market remained the same month-to-month at 23 days and is up by 2 days when compared to last year. The median selling price is up both month-to-month and year-to-year, 1.69% and 3.99% respectively. Moving on to San Francisco County, the number of sold properties is up on a month-to-month basis by 4.86%, while year-to-year it's down 43.11%. Days on the market went down to 18 days from 25 days month-to-month, but that is still up 5 days when compared to last year. The median selling price is up month-to-month and down year-to-year, up 2.89% and down 5% respectively. Quick side note, Marin and San Francisco County are the only two counties that had their month-to-month sales up, but just like every other county in the Bay Area, they are all down significantly when compared to last year. Let's move on to San Mateo County. The number of sold properties went down on a month-to-month basis by 19.46%, while year-to-year it's down 45.65%. Days on the market went down from 18 to 14 days month-to-month, but again, that is still up 3 days when compared to year-to-year. The median selling price is down month-to-month and year-to-year, almost 1% and 5.86% respectively. On to Santa Clara County, the number of sold properties went down 26.05% on a month-to-month basis and down 46.79% year-to-year. Days on the market went down by 3 days from 17 to 14 days month-to-month, but that is still almost double when compared to last year. The median selling price down both month-to-month and year-to-year, 2.6% and 2.21% respectively. Let's move on to Napa County. The number of sold properties both down month-to-month and year-to-year, 33.7% and 53.79%. Napa County is the biggest decliner on a month-to-month basis and year-to-year. Days on the market went up from 27 days to 35 days month-to-month and up 5 days when compared to last year. The median selling price is up month-to-month by 3.03% and also up year-to-year 13.06%. Also worth noting here that Napa and Marin counties are the only two counties that saw their median sales price up both month-to-month and year-to-year. Let's move on to Sonoma County. The number of sold properties both down month-to-month, down 10.99%, and year-to-year down a big 42.86%. Days on the market is down 1 day and the same as last year. The median selling price is down month-to-month by 1.94%, but up a good 6.17% year-to-year. And finally, Solano County. The number of sold properties both down month-to-month, down 15.26%, and year-to-year down 42.19%. Days on the market went up from 32 to 37 days month-to-month. That is up 14 days when compared to last year. The median selling price is down month-to-month by 3% and slightly or flat year-to-year. That's the Bay Area Real Estate Market Summary Report for the month ending October 2022. When we look at the numbers, the one thing that stands out is the number of sales transactions when compared to last year, all significantly down. On a month-to-month basis, again, only San Francisco and Marin that was up slightly in sales transactions. Days on the market, as we've seen in the past few months, is steadily climbing. It's steadily climbing back to more normal levels. So in terms of marketing times, it's still pretty good. The one thing that almost all of us are concerned about is the price. Price has definitely slowed down. This month, Solano was the biggest decline at 3%. That's actually nothing. Some counties are even up month-to-month, which brings me to what I'm telling my buyers. If you can still afford to buy right now, you should be seriously considering it. Prices are softening, not crashing, which could mean the more you wait, the more it will get more expensive, both price-wise and mortgage interest-wise. The feds will continue to raise rates, thereby making mortgage rates continue to rise. But here's what most experts are saying. By the end of the first quarter next year or into the second quarter, we can start to see mortgage rates going back down as the Fed eases on rates. And along with that, they are forecasting a pickup in sales activity again. This is important. Listen up. We have not solved the inventory problem, especially here in the Bay Area. Which means when buyers realize that this is the new environment that we have and it will stay this way, we most likely see them coming back on the market. And when that happens, guess what? Bidding wars are back again. So if you couldn't compete the last time, you didn't have 100,000 or more to throw around and outbid the competition, again, if you still can, you should really look into buying now while you actually have the slight upper hand. There are numerous loan programs out there that either offer down payment assistance or lower than your average mortgage rates. There's one bank that offers 3.99% for qualified buyers, and the property has to qualify too. Talk to your lender. It could mean moving into your new house before the end of the year or get priced out again next year. Hey, thanks for watching. If you want to know what's going on in your specific city, please comment below and I'll get that info to you. If you need help buying or selling real estate, you can reach me via text, email, or call me.